morning, treasurers. This is your host Parthesh Shah, co-founder of Fintech, and you are listening to Night Snippets. In the international market, US Congress passed a mammoth coronavirus relief and government spending package. The package includes a boost to jobless benefits, more small business loans, another $600 direct payment, and funds to streamline critical distribution of COVID-19 vaccines. US Treasury yields fell on Tuesday as investors weighed on the likelihood of new lockdowns stemming from a more infectious variant of the coronavirus in the United Kingdom against the impact of US fiscal stimulus. With new strain fear overshadowing US stimulus, US 10-year closed 2 basis points down at 0.93 percentage points and 30-year closed 3 basis points down at 1.65 percentage points. With risk-off mode, German 10-year yields were down 2 basis points at minus 0.59 percentage points. In the crude oil market, for the week ending December 18th, the API, which is American Petroleum Institute, reported a build in crude oil inventory of 2.7 million barrels versus analyst prediction of inventory draw of 3.13 million barrels. With new strain fear causing lockdowns, resulting in crude oil inventory build, crude is at $49.43 per barrel and it will stay range bound. Crude's short-term range seems to be at $49 to $51 per barrel. In the currency market, dollar index or DXY is at 90.51. A psychological support of 90 has been maintained for last 3 straight days. DXY's today's range seems to be at 89.91 to 91.10. Has the dollar index bottomed out at 89.73? Time will only answer this question, but for now, it seems so. With sterling and EU weakening, DXY will become strong and rise once again. We expect DXY to touch 91.5 in case there is a bounce back. USD CNY or Chinese yuan is at 655. USDINR with a high of 73.95 closed at 73.84 on Tuesday. USDINR's range for today seems to be 73.70 to 74.10. USDINR will try to touch once again 74 and it may fall short, breaching it today once again. In the domestic market, Indian bond market was steady and improved marginally on Tuesday. 522 GS 2025 closed at 506 versus 507 the previous day. 577 GS 2030 closed at 595 versus 595 the previous day. 22nd December 2020 SDL auction analysis. 10-year SDL cut-offs were as below. Karnataka at 651, Himachal Pradesh at 657, Goa at 658, Assam and UP at 660. Market is rewarding strong states like Karnataka with 6 to 9 basis point rewards for managing their finances well. SDL appetite at 655 is still there and there are buyers at that level. The auction was also supported by today's Rs 10,000 crore SDL OMO. We expect 2 to 3 basis point better rates than the prevailing market prices for today's SDL OMO. For 577 GS 2030, short-term range for the market seems to be 592 to 598. As we have been repeatedly saying that the next trigger for the Indian bond market is Union Budget in February 2021. You have next 15 days to reshuffle your portfolio. Please do not miss this bus. That's it for today. You were listening to Night Snippets with Parthesh Shah, co-founder of Fintech. See you tomorrow with the new episode of Night Snippets.